So Mina, can you talk to us again a little bit about just what's going on with the whole jumbo loan situation right now? I think there's a lot of people who are in that situation and having a hard time getting the financing or not approved or having to jump through more hoops than they expected to.
Yeah, and so kind of going back to what I talked about with the mortgage process. So when the liquidity is impacted for all these different companies and the risk of lending is increasing more and more, what the companies need to determine is, okay, it is definitely going to be a risk giving out these mortgage loans because of the job instability and just the current state of the economy as a whole. And so how do we counteract that risk? It's going to be to make sure that if they're giving out these loans, that one, the borrower is very well qualified, and two, just try to minimize as much risk as possible, because from the mortgage company standpoint, they need to make it through this pandemic as well. And they can't just be giving out the loans with the same guidelines as it was in the normal environment, because we're not in a normal environment or world currently. And so what's happening currently with the jumbo loans is all the loan programs being impacted, such as the jumbo loans, is just quote unquote riskier loans deemed when lending, right? And so with the jumbo loans, any loan amount over $765,600 for LA and Orange County, they're increasing the down payment requirements. And so right now, a lot of the jumbo programs you're going to see is going to be a 20% down payment requirement, where in the past there were more like flexible 5%, 10% down options. But the key, I guess, term that I want to focus on is that everything is temporary. I mean, again, we're not in a normal environment right now, but once we get into a normal market, job stability comes back and everything starts to hopefully go back up. At that point, we can expect to see a lot of these different programs coming back. But I think one common misconception I hear a lot is because the jumbo loan market is being talked about a lot in the media, and yes, the jumbo programs, majority are going to require 20% down now, but for any loan amount under the 765, 600 in the conventional category, you could still put down 5% down. And so it's not all the loans that you have to put down 20% for. And so I think that's a very important detail that more people should know about.
How about it's also impacted not only the jumbo loans, but also the qualifications for FHA, right, as well, in regards to the debt to income ratio, credit scores, and things like that?
Yeah, and with the government loans, the reason why those are impacted along with the jumbo loans is because typically FHA, VA, they were known for the looser qualifying standards. And so lower FICO score requirements compared to the conventional loan, a little bit looser on the debt to income ratio. But again, because of the environment we're in, if the lenders are still going to be offering those programs, they had to set some additional restrictions. So before, maybe a company could do 580 credit score FHA loans, and now it's up to 640. And so those are the changes we're seeing. So if you are more like a W-2 employee, typical conventional loan kind of buyer, a lot of these changes haven't impacted you as much as they would have for jumbo loans and also, of course, the government loans. So yeah, again, going back to the whole thing of not all one mortgage is the same.